Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit more longer-term technical analysis on Bitcoin and the cryptocurrency markets, because in today's video, I want to make the bold claim that a Bitcoin bull market will be starting within the next 6 months. Based on all of the technical analysis that I've done on the market, you guys know I analyze the market every single day. There are absolutely dozens of different technical indicators, chart patterns, formations, and otherwise different pieces of analysis that are calling for a Bitcoin bull run to start this year and more than likely in the next 6 months. I'm going to be showing you several of them in today's video. We have about 10 of them lined up. I can't get to all of them simply because this video would be close to an hour long. But we do have a lot of them that we want to discuss in today's video. So if you guys were looking for evidence of why this Bitcoin bull market is starting, why everybody seems to believe that it is coming, and you also want to learn about these technical indicators so that you can use them in your own technical analysis, I do believe you're going to enjoy this video. So guys, before we get into it, if you do enjoy today's video, definitely consider dropping a like, hitting the subscribe button, and also smashing that notification bell, guys. You'll be updated every single time a new video goes out. But without much further ado, let's go ahead and get right into it. Much of what we're going to be discussing in today's video will be out on the weekly chart. We did do some short-term TA in yesterday's video. Not a whole lot has changed, so I figured we'd go ahead and do some longer stuff. So if you're looking for shorter-term TA, check the channel. Video out yesterday. We'll be covering that. We are in a decisive point for Bitcoin at the moment. Anyway, let's go ahead and dive on into it. Most of what we're going to be discussing in today's video actually has to do with moving average. There are a plethora of different moving averages that we want to look at, and the one I want to start with is one of my favorite technical indicators in all of technical analysis. And we'll be pairing this with some other technical indicators to form compound technical indicators and look at chart patterns later on in the video. But for now, the 20 exponential moving average is honestly one of my favorite, if not my favorite, technical indicator in all of Bitcoin technical analysis. This is a very powerful technical indicator on the monthly chart, the weekly chart, the daily chart, the 4-hourly chart, the hourly chart, the 30-minute chart, the 15-minute chart, the 5-minute chart, and the 1-minute chart. It's an important technical indicator on literally just about every single interval on Bitcoin. Unless you find a yearly chart, then it might not be all that important because Bitcoin's only 10 years old and it's a 20 exponential moving average. It's a very important technical indicator, and it's very powerful. Bitcoin at the moment finds itself above this 20 exponential moving average. And if we look back into history, Bitcoin did find itself above the 20 EMA 3 times back over here in the bear market. But we were in the bear market, so sometimes the market will rally, but we're in a bear market, so of course we're going to start moving to the downside. As you guys can see here, Bitcoin got squeezed in between $6,000 and this 20 EMA here for several months before we finally had the bearish exuberance to break to the downside. That is what we saw, and this was an important technical indicator that contributed to that. But an interesting thing starts showing up as we look back into the previous, into the history of Bitcoin here on 2016 and 17. One of the things that we see is that Bitcoin never really went below the 20 exponential moving average out here on the weekly chart. Actually, it never did on a candlestick. It never closed a candlestick below the 20 weekly exponential moving average. We went below it a little bit here on Wix's, and yes, I know Wix's isn't the correct grammar. I understand. I say Wix's because it sounds funny. But either way, we do see that the 20 exponential moving average provided a lot of support for Bitcoin. And we also find back over here that Bitcoin got above the 20 exponential moving average twice back over here. Let's go ahead and look at where we are so we have context. This is the tail end of the 2014-15 bear market. Bitcoin was coming out of the bear market. This is where the bull market started. I've talked about in the past why I believe the Bitcoin bull market started here in October of 2015. There are a lot of different technical indicators that point to that. Many of them we'll be talking about in today's video because they're calling for another bull market pretty soon. But we saw that Bitcoin got above this moving average twice. Bitcoin came up here and rejected off of it, then it got above it, then it started a bull market. That is what happened. And if we look back over onto our current market, we see that Bitcoin has, for the first time in a long time, gotten above this 20 weekly exponential moving average. Now you might think, well, Jeff, it got above the 20 weekly exponential moving average, bull market, right? We're blasting off to the moon. Bitcoin's about to be worth $10 million. Hold your horses, because there is something else that we have to look at, and that is, of course, how many times it took Bitcoin to get above this moving average before it actually stayed above it. Bitcoin back over here got above this moving average once, fell over, got above it a second time, and that's when the Bitcoin bull market started. We haven't started a bull market just yet, and we haven't had technical confirmation of it just yet. For that, I would like to see Bitcoin go above $6,000 and sustain that for over a month. But Bitcoin also needs to stay above this 20 weekly exponential moving average. This is the first time during our accumulation phase, the period below $6,000, that Bitcoin has actually gotten above that 20 weekly exponential moving average. As you guys know, I'm expecting a major correction in Bitcoin, probably a 20 to 30% correction, maybe not 30%, definitely over 15%. 15% though. I'm expecting that'll pull us below the 20 weekly exponential moving average, and then when we get back up above it, that'll be the second time we get above that moving average, and like you saw in the last bear market, that would be a technical confirmation of the next Bitcoin bull market starting. Now, with that said, we got to keep rolling because there's so much to get to. The next thing I want to talk about would be the 200 daily moving average, and then we're going to go ahead and pair that with a couple other moving averages, but I do want to start with the 200 daily moving average and the weekly version of it as well. This moving average right here, this kind of greenish color, would be the 200 daily moving average. This is a very important moving average as well, almost as important as the 20 weekly exponential moving average, and honestly, there may be an argument that it's even more important than the 20 weekly exponential moving average. Bitcoin, as you can see, is above the 200 daily moving average at the time of recording this video, but an interesting thing starts to show up if we look back into the history of Bitcoin. During the bear market, Bitcoin attempted to get above this level, and it couldn't. We didn't have the bullishness to do so. We did see that Bitcoin fell below it for a time and got back up above it, but Bitcoin was still correcting. We weren't all the way into the bear market just yet, so this doesn't really count as a bullish break above it. But if we continue looking back into history, we see that Bitcoin never once came down and even so much as touched the Bitcoin 200 daily moving average, except for on one day out of 700 or 800 days of bull market did Bitcoin come down and touch this level. It was a major level of support, and I remember using it and looking at it back in 2017 when Bitcoin was in the bull market as a final level of support should Bitcoin need it. But if we continue looking back into the past here, what you just saw recently is that Bitcoin did break bullish above the 200 daily moving average. On our time period right now, in the last couple of weeks, Bitcoin has gotten above that 200 weekly moving average. Excuse me, 200 daily moving average. The last time that we saw that happen, Bitcoin started a bull market, guys. We saw it right over here. We saw it at the beginning of the bear market. That doesn't really count. The last time that we saw Bitcoin do this, Bitcoin started a bull market. And of course, same thing is true with the 20 weekly exponential moving average, as is true with the 200 daily moving average. This is the first time we're getting above it. The second time will likely be the bull market. We're not quite there yet, but we should be there within the next 6 months. Now, continuing on, out on the weekly chart, there's also something important on the 200 weekly moving average as well, and that would be a pattern of Bitcoin getting support on this moving average. In 2014 and 15, Bitcoin came down and tested this level several times before we finally bounced off of it and rallied up and started the next Bitcoin bull market. Again, ever since then, Bitcoin never came down and even so much as touched this level, but recently we have. Bitcoin came down and tested this as a major level of support, and for a couple of months there, I was concerned that Bitcoin wasn't going to have the bullishness and was going to break this moving average. And if it did that, all of our technical analysis goes straight out the window and we got to start from square one. But that hasn't happened, and right now it doesn't look like it's very likely that's going to happen. The last time, and I know I've said this a lot in this video, but it's because we're looking at the previous market to predict the future, and you can do that with a lot of certainty, especially on something that is predictable like Bitcoin and other markets. At least on the longer term time frames is predictable. The longer term time frames you are, the more predictable the market is. But the last time we saw Bitcoin come down and test the 200 weekly moving average, a bull market started that very same year. Now, we did see that happen in 2015, and here in 2019, 4 years later, a year before a halving, just like we saw in the last accumulation phase, I do think that we're coming into a bull market. Now, guys, we're nowhere near even done. I'm trying to rush through these because, like I said, there are so many to cover. We're already 8 minutes into this video. This video will end up being well over 20 minutes long, simply because there's so much to get to, but let's keep on chugging. The next thing that I want to talk about would have to do with the 200 daily the 200 weekly and the 20 daily also, let me speak. The 200 weekly moving average and the 50 weekly moving average. Those are the moving averages I'm looking for, because if we look back into history here, we have our Christmas colors. Let's go ahead and get rid of this 20 for a minute. We'll get back to that. The last time that we saw these two moving averages cross, I believe I'm actually talking about the daily chart, not the weekly chart, apologies. The last time that we saw these two moving averages cross here on the daily chart, it was a very bullish thing. We saw them cross bearish here. This was a big deal. A lot of people were talking about this back in March of 2018. I made videos on this. People were talking about this being very bad, and it probably did have something to do with extending the bear market, although the bear market was going to come anyway. The last time that we've seen a bullish cross between these two moving averages was right over here. You guessed it, at the beginning of the last bull market, guys. These two moving averages crossed right over here in October of 2015, and after they did, a bull market ensued. Right before that, we saw one bullish cross right over here before the bull market started, and that too was where we are now. If you look back into time as well, before that, we saw that there was another Bitcoin cross that we can look at. This one doesn't really count, but if we look back into history, the last time that we saw a bullish cross on this moving average was right back over here in February of 2012, right here. And if you zoom out and you look at what this means, that's actually kind of the beginning of this bull market back over here that a lot of people don't remember in 2011 and 2012. So what we're looking at is that this cross has happened 3 times. One of the times happened right before a bull market. The other 2 times happened at the same time that a bull market was forming. And if we look at our current market, Bitcoin, as you can see, these 2 moving averages are closing in on themselves, and it does look like that they will be crossing sometime next month, maybe at the end of this month, guys. It might even happen in April of 2019. So these 2 moving averages crossing almost always predict a Bitcoin bull market. Sometimes, as we saw, they will cross before the Bitcoin bull market starts. The market will crash. These 2 moving averages will fall over, and they'll cross again, something like this, and then they'll cross bullish again, and then a bull market will start over here. Something like that is very possible and definitely decently likely, so watch out for that. Just because they cross doesn't necessarily mean we've started a bull market. We can see a cross right before the bull market starts. We see that crash, then the bull market starts in a couple of months. So I'm not saying a bull market starting next month. I am saying, however, that one almost certainly seems to be coming in the next 6 months based on all our technical analysis. Next moving average we want to look at also has to do with the 200, except this time we're looking at the 200 and the 20. Very similar thing to the 200 and the 50, almost identical. We see that there's been a cross on these 2 moving averages very recently, right over there. Last time we saw a bearish cross was in March of 2018 as well. And if we look back into time, guess what? Same exact thing as the 200 and the 50 as on the 200 and the 20. Same exact thing, with the first one being the fake rally before the bull market, second one being the bull market starting. That is what we want to look at. And if we look back into time here, same exact thing as well, with the last time they crossed bullish was here at the beginning of a Bitcoin bull market. These 2 crosses are very powerful for Bitcoin, and we want to keep an eye on them because they are going to help us predict when a market starts. One more cross, and I promise you we'll be done. We have to go out to the weekly chart now and look at the 200 the 200 weekly moving average and the 20. I'm sorry, we're actually on the daily chart still. If we look at this moving average, then we want to check out what is going on here. The 200 daily moving average and the 20 daily exponential moving average. These 2 moving averages are likewise important for a very similar reason as the one I just showed you. The 20 simple moving average and the 20 exponential moving average follow each other very similarly. If we check out what's going on here, same thing is true with the 20 exponential, with the 20 daily moving average as with the 20 exponential. Keep an eye out for this. I believe these do show up on the weekly chart as well. At least I do have them doing that in my notes, but I believe I misspoke. But one thing we can also see with these 2 moving averages is that whenever they come very, very close like this, Bitcoin comes down and gets very close. These 2 moving averages have never crossed, but when they get close to crossing like that, that also corresponds with the beginning of a bull market. They're relatively close right now, and if Bitcoin does fall over like this moving average, the 20 weekly, is a quick enough moving average that it's going to curve down here. We're going to get close to this 200 weekly. Hopefully we don't break it. We don't know what happens if that happens. The market's going to do something like this, and then we'll probably go and start our bull market sometime later on in August, maybe on into even October. Guys, 6 months is a rough time period. I expect it's going to happen this year, and I do expect it'll happen within the next 6 months. But if it happens 7 months from now, don't sue me. I think the technical indicators and the chart analysis and everything is predicting it much sooner than that, although the next thing I want to talk about actually has to do with the 50 cross and the 200 cross. These 2 moving averages are very important as well, for a very similar reason as before as well, guys. Same exact thing. When they cross bullish, you see a Bitcoin bull market start. There's so many technical indicators like this. These are all very similar. We have other stuff with the oscillators that we're going to get into in a second. We do want to keep an eye on that, but it is important that we understand that all of these crosses are calling for bullishness on Bitcoin, and we want to realize that a Bitcoin bull market more than likely is going to be starting in the next couple of months. Let's continue, guys. There's even more stuff that we want to talk about. Let's take a break from technical analysis on technical indicators and talk about market structure and look at the way the market is actually set up. The thing I want to talk about here is percentage retracement from all-time high. When Bitcoin came down to $6,000, retraced from $20,000, it retraced 70% from all-time high. During the last Bitcoin bear market, Bitcoin retraced 75% from all-time high, if my memory serves me correctly. 75% right there. Retraced from $1,200 all the way down to $300. Very similar number. After Bitcoin retraced to $6,000 over here this year and the last year, Bitcoin pulled back about 50% from $6,000 down to support at $3,000, which was how we were able to call $3,000 as the bottom. If we look into the previous bear market, the bear market ended and the accumulation phase, which we are currently in, this would be the accumulation phase during the last Bitcoin bear market, during the last Bitcoin bear accumulation phase cycle. This was the bear market right over here. If we look at those, then we see that Bitcoin pulled back 50% from its analogous level of support. $6,000 and $300 in these two markets are basically the same thing. We saw Bitcoin retraced 50%, in this accumulation phase, and after it finished that accumulation phase, we entered a bull market. These two markets are structured exactly the same. We have a bear market right here that we can look at, and then after that, we have an accumulation phase. That's our accumulation phase. That's our bear market, and then we see the bull market follow it relatively soon. If we go ahead and check out how long these two markets lasted, we see that the Bitcoin bear market over here lasted around 400 days. We'll call it 400 days for simplicity. It's not exact, but it's close enough for government work. As we can see over here, Bitcoin's accumulation phase lasted about 285 days. Once again, not exact, good enough for government work. Bitcoin over here in our bear market, the Bitcoin bear market lasted about 340 days. So we're kind of on fast forward here, 330 we'll call it. About 330 days. So if we were to go back and do our ratios, I'm not going to get into the math right now, but if we were to check out our ratios, that would put Bitcoin starting a bull market sometime around later on this year. You can go ahead and check that math for yourself. I'm not going to get into it in today's video for the sake of time, but if you look at the length of the last accumulation phase in comparison to the length of its bear market and then use that ratio and apply it to our current bull and bear market cycle, and these two markets are so similar that I think it is valid to do that. If you do that, that calls for a bull market to start sometime before September, probably August, September, that kind of territory. We'd be looking for it to start there, maybe even earlier based on other technical analysis. Anyway, that's enough of market structure. Let's get back onto a couple more technical indicators, and then we'll go ahead and wrap the video up, guys. I can literally make this video over an hour long. There's so many technical indicators that I talk about in the videos, but needless to say, I don't want to get into all of them in today's video because this would be either a 4-part video or an hour-long video, and I want you guys to be able to actually see this video today. So let's keep going. The next thing I want to talk about would be on the weekly chart, and it would have to do with our oscillators, and it would be the weekly MACD. You guys know I'm a big fan of the MACD. It's a very strong technical indicator. It's never, well, it's not that it's never wrong. It's that it's often not wrong. A lot of times it will give you accurate information, and a lot of times its crosses are well respected by the market because so many people use MACD that they trade by it and then they change the market to do what the MACD is telling them. If the MACD has a bullish cross, people are going to buy. If Bitcoin has a bearish cross on the MACD, then people are going to sell, and of course vice versa. But if we look at the market here, what we see is that over the last 4 months or so, Bitcoin has had a very strong uptrend on the histogram here. This is important. This is very important for shorter term technical analysis. This is very valuable. We're seeing that the MACD line and the signal line are crossing back up, and they're moving up towards the zero level on the histogram. Very important. But let's go ahead and look. What was the last time that Bitcoin had a bullish cross below the histogram? The zero level is the histogram. What was the last time that Bitcoin did that? Well, of course, we saw it happen back over here in the bear market, but this is just kind of crap. That doesn't really count. If we continue looking back into time, you guys know how this worked by now. The last time it happened was in the last accumulation phase at the beginning of it, in the same way that our Bitcoin bullish cross over here happened at the beginning of our accumulation phase. In exactly the same manner, the last time we saw that was at the beginning of this accumulation phase right over here. And right around the time that Bitcoin started to go above the zero level on the histogram, it was getting close to doing it. Right around the time Bitcoin's MACD was getting close to going above the zero level on the histogram, that was when the Bitcoin bull market started, guys. So watch for these two lines, the Bitcoin MACD and the signal line here on the MACD. Watch for these two lines to continue crossing up to the zero level, because as they get closer and closer and closer, that means we're getting closer and closer and closer to a Bitcoin bull market. Bitcoin's MACD is oftentimes above the zero level on the weekly chart during a bull market and below the zero level on the weekly chart during a bear market. Most of this bear market, Bitcoin's MACD has been below the zero level. Most of the 2016-17 bull market, Bitcoin's MACD had been above the zero level. In fact, it never went back below the zero level until the next Bitcoin bear market started. One more thing that we want to look at, and then we're going to wrap it up from here and make our closing statements, but we do want to look at one more thing, and that would be the weekly RSI. Guys, I'm getting out of breath because we're talking about so much technical analysis. Oh my gosh, this is cardio for me. Anyway, as we can see, Bitcoin's RSI out here on the weekly chart is currently sitting around 55. That's an important level. If we look at Bitcoin's RSI over the last several years, we can draw a level of support and resistance roughly around 55. We'll call it 55 for simplicity, give or take 1 or 2 RSI points. It's not exact science. But what we see here is that for the entirety of the Bitcoin bull market, starting over here in 2016 for simplicity, it started before that, but for 2016 for simplicity, all of this, Bitcoin's RSI was above 55. All of this price action, and a lot of times it was sitting above 70. Very, very bullish Bitcoin bull market, of course. We saw Bitcoin was ridiculously exuberant. People were buying Lamborghinis, popping champagne corks, buying mansions that they couldn't afford, and getting on television shows. You guys know how 2017 was. It was absolutely crazy. But as far as the technicals are concerned, Bitcoin was above the 55 level. If we look back into history here, guys, this little movement here that we saw in Bitcoin, that's so important. That's where we are right now. That is very important. What we saw was that Bitcoin's RSI came up here to about 60 fell over. And then after we started the Bitcoin bull market, we got above 55 on the RSI, stayed above it for 27 months during a bull market, and then the only time that we went below it was after the bear market formed. Bitcoin's RSI just went up to 60 for the first time ever since this Bitcoin bear market started. We're coming back down now, and of course now Bitcoin looks like it's entering into this same period on the market right here. It looks like that's exactly what we're doing right now. Guys, I've just shown you about 10 different technical indicators. I've talked about crosses. I've talked about market structure. I've talked about MACD, RSI, oscillators. I've shown you moving averages on different time frames. I've shown you so many different technical indicators, and I haven't even covered even half of them that are calling for a Bitcoin bull market in the next 6 months. One of these technical indicators alone could be ignored. 5 of them alone could be ignored. Heck, even 10 of them could be ignored if you really wanted to go that far. But so many technical indicators are calling for a Bitcoin bull market. And let me tell you guys something. It's not just the technical indicators that are calling for a Bitcoin bull market, because at the end of the day, technical indicators are important, but they're not important if nobody listens to them and nobody trades by them. But let me tell you something. People are trading by them. People are buying up Bitcoin. People are moving into the market. Institutions are getting invested in the market. They're getting interested in the market. People are getting interested in blockchain again. People are getting interested in Bitcoin. And when the next Bitcoin bull market starts and you see all of the mainstream media say, look at all these technical indicators and all these technical confirmations that we just found that called a Bitcoin bull market, and they didn't call it 3 months before it happened like we're doing here, and like many other YouTubers to their credit are doing as well. When you see that happen, we're going to start taking off like a rocket ship, guys. I've told you, the next Bitcoin bull market is not going to take us to the moon. Guys, we've already been to the moon. We've been there, done that, got the postcard. I don't want to go back. Bitcoin ain't going to the moon this time, guys. Forget the moon. Bitcoin's going to the stars. I do believe Bitcoin's going to be worth over 6 figures during the next Bitcoin bull market. All we have to do is buy up a ton of Bitcoin and be patient and wait for it to happen and be understanding. We need to be learned about the market. We need to learn what we need to do in the market. We need to learn how to do technical analysis. We need to learn about these technical indicators so that we can then predict when these Bitcoin bull markets start. It's very important that we have an understanding of the market. Of course, guys, that is why CT2A is in the description if you want to join. We had 53 people join the course during that sale, which is absolutely insane. Welcome to the course, guys. If you guys are in the course, tell people in the comment section down below what you think. There will be another sale later on this month for that, so if you want to wait and you don't want to spend the full price, there will be another 20% sale as we go ahead and launch 5 new videos to the course, so look forward to that. If you guys want to pay full price, though, I'm obviously not going to discourage you. You go right ahead and do that. I don't mind. Not in the slightest. But anyway, guys, tell me in the comment section down below what you think of today's video. Did you enjoy the content? Did you enjoy the rapid-fire style technical indicators and chart patterns and market structure and everything being thrown at you? I was trying to get as many of them out as I possibly could so that you guys could pick and choose which ones you want to pay attention to, which ones are important to you, and so that you guys could be ready for when the Bitcoin bull market starts. You guys have a good understanding of why the market is doing what it's doing and what technical indicators you can use to predict the market doing so. Anyway, guys, I do hope you did enjoy today's video. If you did, tell me in the comment section down below. If you didn't, tell me in the comment section down below. We'll have a conversation about it. Anyway, guys, that's going to wrap it up for today's video. I just realized I'm talking at 200 words a second because I've been trying to go so quickly, and we're still at 23 minutes. But like I said, that's going to do it for today's video, guys. I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.